the escrow, is that going to be separate when you make all these large payments? How's that?
Oh man. You're going to go down that road with me today? Find out. And I'll tell you why you want to do this later. But find out if you can opt out of escrow. Because when you have an escrow account, all the bank is doing is setting up a savings account for you. So you're paying your mortgage amount and they're taking your taxes and insurance, dividing it by 12 and adding that to your mortgage payment.
Yeah.
And they're putting that money in a savings account for you that pays you no interest so that they can pay your taxes and insurance for you.
Yeah.
Yeah. So if you could take that money, your taxes and insurance, do you have any idea how much that's going to be, your escrow payments?
I want to say 400 maybe.
Okay, about $400. Watch this. Okay, about $400. What are these principal payments here? About the same as your escrow payment?
That's correct.
What if that money could be going to your principal instead?
That'd be perfect.
And look how much interest you're saving each time you do that. A year's worth of doing that would save you about $7,633 in interest. So, Don, how do I pay my taxes and insurance? You know, they take credit cards. He says, well, I'm going to pay interest on the credit card, Don. But I tell you that, but it won't be $7,000 worth. I'll show you how to pay $100 or $200 interest on that while you're taking that money that they're putting in a savings account for you, making no interest, where we can use that money to save you over $7,000 in interest you don't have to pay the bank. So let me ask you this. Would it be okay for you to pay $200 in interest so you can save $7,000 in interest?
For instance, when you say opt out of escrow.
Opt out of escrow, meaning you don't give them the money for taxes and insurance, you pay it yourself.
Gotcha.
You can pay your own taxes and your own insurance depending on the loan that you have.
Okay.
Some loans require it, an escrow account, but some loans will allow you to opt out of paying it so you can pay it on your own.
How would we pay the taxes and insurance by ourselves?
I guess they come in separately.
Yeah, so here's what you could do. This is Alexis, right?
Yeah.
So if they're saving that money for you, could you save it for yourself?
Yes.
Could you put that money in a savings account for yourself and you get the interest off of it?
Yes.
Well, that's one way. The other way is use a credit card.
Okay.
Yeah. As long as they get their money, they don't care how they get it. Pay them with a credit card. And then the money that would have, so during the year, you can use that money during the year to save you tons of interest on your mortgage and then subtract the interest that you pay on the credit card from the interest savings. So we have a computer program that keeps track of all of your interest savings. You put everything in just like a financial GPS, and we run all of this for you so you don't have to. The program tells you exactly how much money to move, when to move it, when to pay the taxes, when to pay the insurance, put it on the credit card. We're going to show you exactly how much it's going to cost you. And we'll also show you how much you saved by using that money correctly for you. How does that sound, sir? And ma'am?
I need that. That sounds awesome.
Great.
Okay. Are you all set for now?
That man, thank you so much.
Are you going to contact us?
Yes, for sure.
Are you going to buy my book?
100%. I'm about to purchase it now. This is $1,000 worth of information you just gave me.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L. method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.